Welcome everyone to the CGTN live stream. We are here at the 5th Bund Summit in Shanghai. I'm Michael Wong. It is the final day of this year's Bund Summit, and we're here to wrap up the summit for you. Our very first guest to discuss this year's event is Kerrigan Proctor. He is the president of Asia Pacific for Legal & General, one of the world's largest investment managers for pension fund assets. So Kerrigan, welcome to the program, and thank you so much for sharing your thoughts with us. Obviously, a lot of interesting discussions here at the Bund Summit, as always, ranging from a series of topics. What stood out to you at this year's event?
Great. Well, firstly, thank you for inviting me here today. It's a pleasure to be here, and it's a pleasure to be at the conference. It's, as always, really high caliber speakers, excellent conversations, really meaningful discussions. So that's been great. So many standout points. Probably just one that I'd like to share that really. You're always looking for something that shifts your perspective.
Yeah, that aha moment,
exactly,
right? That thought-provoking
exactly.
moment.
And it was a conversation last night around the competition for global subsidies for green tech. So between, let's say, China, US, Europe, and how does this manifest itself, and what are the consequences, both good and bad, of this global subsidy competition? So I thought that was an excellent discussion.
Yeah, and the conclusion, maybe some thoughts from that discussion?
Well, I think it's genuinely, I took it to be both good and bad, right? Because global solutions applied to a global problem with the best technology available sound like a good thing.
Yeah.
Right? But these three areas, China, US, Europe, of course, may benefit from that. But what will happen to the countries that either try to compete and find that they can't compete in this subsidy race, or find that they just don't want to start competing? Is that a good thing or a bad thing, and how does this all develop over the longer term? So I thought a really fascinating conversation from the speakers last night.
Yeah, absolutely. Let's talk about the macro economy right now, because the global economy this year, Kerrigan, I think a little bit sluggish. There might be some concerns of, hey, are we in an era of maybe slower global growth for longer? When you take a look at Asia, what are your thoughts in terms of the macro economy here? Because Asia is home to so many dynamic economies. It's so vibrant here.
Yes.
What are your thoughts on this region?
Yes. Well, I mean, just some broader thoughts globally, and then let's come down to some of the thoughts here. Of course, we all know the picture. It's high inflation caused by many reasons, sell-off in rates, partly to control this picture of inflation with the economic consequences of that. And that all comes on top of economic scarring, individuals, companies, governments from the pandemic, shifts in labor, shifts from goods to services and then back to services again. This is all pretty a set of pretty dynamic events. And I think the thing we need to remember for global investors is that the large parts of Asia, China as we know, came out of the pandemic about a year and a half after a lot of Western economies. So we need patience for all these things to work through. So a lot of patience. It will take time to restructure some of the challenging parts of the Chinese economy and gain back that consumer confidence. But meanwhile, there are some very bright spots that I'm sure we're going to come on talk on about.
We're going to come to that in just a second. But in this sort of global macro environment right now, Kerrigan, how do you think about risk and reward? Right, because right now you still have inflation in many parts of the world. They could be a little bit sticky. Headline inflation has come down, but core inflation in many parts of the world is still quite high. You could have higher interest rates for longer. And investors, investment managers, I feel, for the past decade had this kind of certain mindset, and they had to shift on such a rapid basis to this new environment.
Exactly. And at the start of this year, that was really characterized by nervousness, wasn't it? So people were going into cash. Cash, we know what that is, and really worried about the valuations and circumstances of everything from venture capital all the way through to real estate. So time of nervousness. And as we've seen the year go through, we're a little bit clearer about where things may be going. We don't know for sure, but we're a little bit clearer. So real allocations to global fixed income coming in, reshaping the global fixed income portfolio, but real allocations there. And I think back to the high inflation, you're looking for real alternatives to equities. So that thought of alternatives to equities really coming back in now after a real hiatus to think about what more could we do to get this diversified portfolio of high returning assets to go alongside our global fixed portfolio.
So in terms of the alternative space, which areas are you specifically looking at that looks attractive right now?
Yeah, so in the alternative to fixed income space, then there's starting to be some attractive infrastructure elements that come in. So still elements of the private debt portfolio. Some emerging market infrastructure debt is something that we're looking at the moment. That's very interesting in that space. And then over in the equity alternative space, then a range of things there. So there's some new venture capital funds that we've got coming out. And then I think the important thing relevant for us here today is the really exciting opportunity in China. Green tech, can I say? Green tech and the green finance that comes with that. So I think public and private space in China in things like EVs, power batteries, solar. This is an exciting space for global investors to think about.
Yeah. What about the asset management industry overall here in the Asia Pacific? Let's start with the trends first, and then we'll talk about the opportunities and perhaps challenges. But what kind of trends are you seeing in Asia?
Yeah, well, it would be some of the same story, of course, but we haven't had the inflation and rate shock here as we have had globally quite in the same way. But certainly that element of international allocations, global fixed income, now with high yields available in the rest of the world, that's a theme for us here, bringing that capability here. And back to the alternative side, some really good conversations around, okay, now I'm getting my mind around what might be available out there and thinking about diversification, some good conversations about selected areas in which people could go into. I think the other thing that will be really interesting is the development of multi-asset. So longer term investing, or the advent, maybe the pensions and wealth management reshaping in China of multi-asset funds and getting to a better risk return fund structure for long-term investing. So that's important. And then, of course, ESG and what that means for Asia, what that means for China. I think it means different things for different people in different parts of the world. But I'm excited about that, but we should probably talk more about what that means.
Exactly. I want to talk about maybe the China market overall, because last year China rolled out its very first private pension scheme. What's your view on that? What does that mean for LNG?
Really excited. Legal & General, we're a pensions company primarily. This is what we do around the world, UK, rest of Europe, US. Pensions is our thing. So we understood that some of these changes were coming, they're needed, it's definitely going to happen. It will be the world's largest pension market. And so we thought we really wanted to be here to participate in that market. And it has, I think, huge implications for the maturing risk profile of the capital markets in China, the type of products that come out of that, and the way in which people think about how they should secure themselves financial security in retirement.
Yeah. And you're looking to start operations, I guess, here on the Chinese mainland market. What is sort of maybe behind the thinking of that? And then what's your long-term view of the China market for Legal & General?
Well, two things. Pensions and green finance, you might have guessed from my previous comments. So it's really about setting up, we have an office in Beijing, really setting up operations there to engage in the pensions market. We think we've got some experiences, both good and bad, globally to share and contribute to the development and maturing of the pensions market here in China, and really working with like-minded domestic Chinese partners to see if we can make a commercial operation out of that.
Okay. So you mentioned green investments perhaps here in China. What is the view from global investors when it comes to green investments? Because China now, the EV market is absolutely huge, biggest producer and seller of electric vehicles. So how's the interest in that space? How's the return profile looking like?
So, I mean, I think the return profile, the investment characteristics are excellent. The ESG, if you like, low carbon transition credentials are excellent. Our role is to really tell that story to global investors, because people really don't know, not that aware that China is the world's green giant. It's 2/3 of power batteries. It's over 50% of EVs. It's coming towards 90% of the entire solar supply chain. It's an incredibly powerful story, which I know everybody here knows, but actually when we get out and tell that story, people are quite surprised that this is what's happening, and they should participate in this investment opportunity with us.
Fantastic. Any parting thoughts for our audience, Kerrigan, in terms of your other major takeaways from the Bund Summit and your overall travels here on the Chinese mainland?
It's been excellent. I think, as I shared with you, we're keen next year to get out and see some of these investments in electric vehicles, power batteries, and get out more broadly across China and really see and embrace what's going on here.
This is your first Bund Summit in person, I guess, in
First
Shanghai.
one in person, yes. The last couple of years virtually. This first one in person.
Plan on coming back next year?
Absolutely, yes.
Okay, fantastic. Kerrigan, thank you so much for joining us.
Thank you.
All right, we're going to take a short break and back in 2 minutes. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN. All right, and welcome back to this CGTN live stream. We're covering the 5th Bund Summit here in Shanghai. I want to bring in now CGTN's very own Dai Kai, who's been covering this year's summit for us. Kai, welcome to the program. Just want to get your overall thoughts, your impressions of this year's event.
First of all, thank you for having me here, Michael. I think over the past couple of days, it's been quite an exciting a few days, I would say. But a key word here that stuck out to me is fragmentation, or more specifically, geoeconomic fragmentation. It's been mentioned a lot of the times by a lot of guests. I think in a way speaks about like that weak sentiment now in terms of this trade or potential risks that we're probably facing slower global growth. That's why the guests here are talking a lot about some of the potential new driving forces. For example, some of the cutting edge technology, for example, artificial intelligence, that could be the next driving force or among one of the driving forces. So, and when it comes to technology, I think a lot of the times we talk about fintech, right? And in terms, I mean, under the context of China, we have probably the biggest potential on a global scale right now in terms on that front, because now we have probably one of the largest amount of mobile phone users. We have probably the biggest or the most 5G stations installed here in the Chinese mainland, and people are already used to, people like you and me are already used to mobile payments. It's already in our everyday life. So we have a fertile ground for further developing that fintech. We have a massive potential on that front. So it's undoubtedly going to be a major growth driver. And but also there are things we have to think about. For example, how to best regulate some of the cutting edge technologies like artificial intelligence, because we want to regulate it just enough to get everybody involved, get everybody on board, but not too much to stifle innovation. So how to keep that balance is also a thing we're going to think about down the road.
All right, so let's address each of the points that you mentioned. My first question, well, I guess my second question to you now is, when was the last time you used cash? Because you spoke about fintech, right? When was the last time you used cash? Do you remember?
I think it's pre-COVID.
pre-COVID.
Yeah.
Do you remember what cash looks like, maybe?
No, it's probably, yeah, because we are so used to mobile payments. We already, it's already, whenever we go to a convenience store, or like mostly when we go shopping online, right?
Yeah.
We already have our own platform, like some of the biggest online shopping platforms. That's the place to go nowadays, instead of like physical brick and mortar shopping malls. So I think that speaks about like this paradigm shift in terms of how China's consumption habits are going through this big change over the course of last several years. So that's why we have been using cash for a very long time.
Absolutely, and it's not just about the population centers in the urban areas. You see much of the countryside, the rural areas here in China using mobile payments as well. And that's why I totally agree in terms of fintech, this space is a huge growth opportunity. I'm not sure if you've used the Chinese digital currency yet. It's called the ECNY. And like you said, we have the most mobile phone users in the world in this country. Massive amount of 5G base stations. The build out is extremely rapid. Even in some of the rural parts of the country, you see broadband being connected. So that would mean a pretty seamless transition, or rather frictionless, going from the mobile payment system or the mobile payment ecosystem that we see right now to perhaps maybe a central bank digital currency in the future. So I guess that foundation is there. So China, I think, is definitely going to lead when it comes to central bank digital currencies as well, and that has huge implications for fintech in general. On your question of fragmentation, that was something I think a lot of the guests here, a lot of the delegates discussed, and I think through my conversations with them, they don't want to see fragmentation. Obviously, the past few decades, we've seen what more economic integration, either at the global level or regional level, has meant when it comes to development. For example, when it comes to prosperity, when it comes to living standards, right? So when it comes to multilateralism, how that supports the economy, I think a lot of the guests today at this summit are worried about what fragmentation may mean. The IMF, for example, the World Bank, for example, warning about the costs of economic fragmentation, the loss of efficiency, for example, because ultimately the countries and societies that will bear the brunt of that fragmentation will be lower income countries, will be emerging markets and developing economies. So a lot of the discussion here, I think, is about, how do we really find more multilateralism? How do we promote more global cooperation in this uncertain era that we live in? But then we also have to be pragmatic and realize that we are entering into perhaps a more uncertain era. But despite that fact, how do we still try and promote more global cooperation so that we can lift more people out of poverty, for example, how we can raise living standards a little bit more for all societies around the world. Something else that you were looking at, new industrialization. You mentioned to me, what were you looking on that front?
Right, new industrialization, I think it's, strictly speaking, is not something new. I mean, it's been brought up lately, but actually it started almost 10 years ago, a decade ago, because that started when China started this supply side reform. Basically, it means cutting, excess capacity. But now I think there is a shift on that front in terms of, people are turning more into the high-tech sector because, as we talked about, like this fragmentation that happens in trade, it also happens in the technology sector. So I think it's how China or many of the emerging markets or developing countries, they are trying to come up with their own version of technology to really develop on that front, to really de-risk, or as some experts say, de-risk in terms of technology. So new industrialization, again, we see this shift, this big shift in the recent few years, especially when some of the emerging technologies coming along. That's what most of the developing countries have to do nowadays. So new industrialization, it kind of shifts from the previous most steel production or like some brick and mortar production to now maybe more high tech. So that indeed, that needs more talent, and that also needs more fiscal support from the government level. Yeah.
And new industrialization might have implications for the global transition to net zero as well, because China, a major producer, for example, of solar panels now, of electric vehicles, of lithium-ion batteries. So if we really want to see that global shift towards carbon neutrality, I think China's industrial base needs to play a role in that transition. One of the key themes at the Bund Summit this year, the second day of the summit, was all about sustainable development and China's role in that, because according to the latest United Nations report, which was released earlier this month, the UN saying that, hey, we are really off track as an international community when it comes to the Paris Agreement goals of limiting global temperature increases to well below 2 degrees Celsius above pre-industrial levels. Ideally, we hit 1.5. Right? So we're way off track on that, and the UN is saying, look, the international community has this critical decade, calling this decade the critical decade if we really want to limit warming by 1.5 degrees centigrade. Obviously, not that many years left in this decade, less than 7 years, I guess, or 7 years to go. So a lot of action needs to be taken on that front. Can we come together as an international community and take collective action to really tackle climate change? Because if you go past 1.5 degrees or get close to 2 degrees, a lot of the impact to the environment is not only going to be damaging when it comes to human health, but a lot of it is irreversible. That's why there is such an urgent call from the UN to really tackle this issue. And we had an interesting panel discussion on that here at the Bund Summit, especially from a developing economy perspective, because again, it's going to be the developing economies, the smaller island nations, the lower income countries that will have difficulties in terms of making that transition. I mean, Kerrigan Proctor just now from Legal in General talking about subsidies, for example. But if you compete in the EV market, for example, in green technologies, and you can drive green technologies down for developing economies, that might be one added benefit, I guess, of subsidy. So what can China contribute on that front, I think, is going to be very interesting. China has already driven down, for example, the unit costs of solar panels. So solar panels, solar energy in general can be cheaper because of China's industrial base, and what can China do on the EV front. And I think for me, the scale of China's green transition will have positive spillover effects for the global transition to net zero, because China needs to achieve net zero at a much faster pace compared to many of the advanced economies. So from peaking carbon emissions in 2030, these are China's dual carbon goals, right? Peaking carbon emissions in 2030 to reaching carbon neutrality by 2060, 30 years, but advanced economies had anywhere between 40 to 70 years to make that transition. So by definition, the scale of China's green transition is going to be massive, and what will that mean for developing economies? I think we should see some positive spillovers on that front.
That's for sure. I think the most important area is how to find that commonalities, as you said. And also, I think currently there are lots of differences, not only in terms of climate, but also in terms of trade, in terms of technology. But I think it's how to find a common ground to really, to get everyone on board, to really, to get everyone going forward as a whole. I mean, that's the most important issue.
Although the panel that was talking about addressing climate change, they weren't that optimistic, because given the global environment right now, although this is something that the international community must work on, and not just governments, but corporates as well. For example, Professor Jeffrey Sachs from Columbia University saying to corporations, hey, you need to get your act together, because eventually climate policy is really going to pick up speed for the rest of this decade. So you need to do your part in terms of the transition to net zero, and also, of course, calling on governments, our panelists calling on governments to really speed up their action when it comes to climate action. But again, how do we get the world together to really tackle some of these common challenges that we face as humanity, right? That was one of the major talking points here at the summit. And I think everyone agreed that, hey, you need that communication, you need that dialogue, despite the uncertainties that we see right now, that we feel right now. Dialogue is the foundation in terms of promoting more cooperation. You have to start somewhere, right? That is the baseline for how we move forward as an international community. But again, I mean, for this year's Bund Summit, so many things were being touched upon. Global supply chains, climate action, fintech, like you mentioned. The very big topic of what's next for globalization was also addressed. We heard, for example, from Dr. Henry Kissinger. The EU's trade commissioner was here, Former U.S. Treasury Secretary Robert Rubin was speaking, saying, I think one statement that Treasury Secretary Rubin said, I think really stuck out to me. He said, China-U.S. cooperation or strong cooperation absolutely essential for life on Earth. I guess, at least in his mind, that is how important this relationship is for the international community. So lots of interesting tidbits. Yeah, interesting perspective. Yeah. Anything else, Kai, that you want to add about the summit?
I think that's pretty much all I have.
Okay. All right. Kai, thank you so much for joining us.
Thank you for having me.
All right, we're going to take another short break. Coming up next, my conversation with Mr. Jean-Claude Trichet, the former president of the European Central Bank. Stay tuned.
A global recovery on shaky foundations, rampant inflation, cost of living crises, and climate catastrophes straining national budgets. How can we bolster cooperation to stabilize the global economy? Join CGTN at the 5th Bund Summit in Shanghai. We'll explore how China aims to foster an open global economy, build consensus, and unlock new opportunities. Only on CGTN.
All right, and welcome back to CGTN's coverage of the 5th Bund Summit. My next guest is Mr. Jean-Claude Trichet. He is the chairman of the International Advisory Council of the Bund Summit. Of course, Mr. Trichet was also formerly the president of the European Central Bank. So, Mr. Trichet, welcome. Thank you so much for talking to us.
Thank you for your invitation.
My first question for you is, what stood out to you at this year's summit? What were some of those aha moments for you?
I have to say that what is extremely important is that it is more or less the first meeting in China I participate in person, and where the other participants were there too. I take it, and I know that you are yourself of this sentiment. The fact that you have all the corridor talks, all the unplanned way of exchanging views and confronting views, and also to discuss new ideas, is something which is irreplaceable by a Zoom meeting, by a video link, or whatever modern communication device. So that was for me a very, very important encounter. And of course, I was also struck by the fact that we could hear in Shanghai, see this dialogue of the old Shanghai, the Bund Shanghai, the Bund meeting, if I may, and on the other side of the bank of the river, you have this incredible modernity that China has produced in a very short span of time. 40 years ago, when I was negotiating with my Chinese counterpart a treaty for protecting and enhancing FDIs, foreign direct investment. So each time I am in China, I have a difficulty to accept that this explosion of, I would say, wealth, progress, and I would say in terms of economics, GDP accumulation has been produced in such a small span of time. It's really extraordinary.
Yeah. I mean, you were first in China, I think you said, in 1982, right? And I love the way you put it, this dialogue between old and new, the Bund, and then right across the river, you've got the modern skyscrapers of Shanghai as well. So, of course, we invite everyone from around the world to come and see the landscape of Shanghai. I want to talk about China-EU economic ties, Mr. Trichet, because at the Bund Summit, we heard from the EU Trade Commissioner. He said that the EU has no intention to decouple from China. Of course, this is a complex relationship, right, between China and the European Union, and yet trade ties between the two sides very robust. How important do you think are China-EU economic ties, especially in a world like this, especially as the global economy is trying to recover with stronger momentum in our post-pandemic world?
As you said, Vice President Dombrovskis was very clear, it seems to me, on stressing first that China is the first economy with which we are trading in Europe. And this is symmetric, because also Europe is the first trading economy for China. So we have a very close relationship on the trade side which is very precious, I have to say. And I take it that the message of the European, my own message, of course, would certainly be that we have to keep this relationship as close as possible, also taking into account, of course, that there are different views on some of the trade aspect, that each country, China on the one hand, Europe on the other hand, wants to keep its own strategic, I would say, assets. And so we have to embark on the appropriate dialogue in order to be sure that the immense area where trade has to be totally free and can increase more, even if we are already the best partner, the most important partner on each side of this dialogue, and also the threshold, the limits where we have both to protect our, I would say, strategic interest. But I am confident. I am very confident because there is a will, it seems to me, from the European part. And again, Vice President Dombrovskis was extremely clear on that, and also on the part of China, as far as I understand, the will of China. So again, this is a very important relationship between two economies that are in the three biggest economies of the world. So that counts enormously, not only for China, not only for Europe, but also for the rest of the world. The prosperity of the rest of the world depends on our own relationship, it seems to me. And that would be my main point. Again, complexity, importance of our relationship, of our trade relationship, importance of our FDI relationship, which are also very important. I have a special stake in that because I negotiated the first treaty between China and France on the FDI side to protect and enhance FDI. There has been some difficulty in the relationship in this respect, and I hope very much that we will also surmount those difficulties. So that's my own understanding, again, of our relationship. They are extremely important for each of us and for the rest of the world.
I want to ask you about common ground, perhaps, between China and Europe. Two areas I look at, perhaps financial services and, of course, climate change. China, obviously opening up its financial markets more and more. The EU, Europe at large, the banking sector still dominates financial services. Do you see more area, stronger financial cooperation between China and Europe, especially when it comes to green finance?
Certainly, the importance of I would say, our own financial relationship is key. I know that the European banks are very anxious to be active in China, and I have also to say that from that standpoint, it is very important that they can accompany the, I would say, rise of our trade, commercial trade. I would say goods and services trade also need to be accompanied by the financial sphere. And this is true, of course, for the Chinese financial, I would say, institutions, as well as for the European financial institutions. I take it that being in Shanghai, of course, is a case in point, because Shanghai has its own assets and reputation and past and present vibrant financial, I would say, activity. And I know what are the ambitions of Shanghai in terms of being a global hub in terms of finance. So again, it seems to me that there we have an immense area where we could be more active, even more active. And I know that a large number of European banks are there. I could see some of them in the occasion of this colloquium, of this forum, of this summit of the Bund. And again, I see nothing that should hamper our cooperation in this domain. It is not a domain where I think we should be shy or timid. Also, fintech is very important. The Chinese economy, the Chinese partner is extraordinarily active in fintech, in sync with the explosion of digitalization and experiences of all kinds that characterizes China today. And I am always struck in any colloquium I go, and in this Bund Summit, to see the importance which was given to, I would say, the explosion of the artificial intelligence, all kind of digital technique, and we had a very good sequence of exposition on the ship when we went in the river to see the beauty of the skyscrapers on the one hand and the Bund old construction on the other hand. But the two expositions we had were absolutely striking, and both of them concentrating on the new advances of the high tech in this domain.
Mr. Trichet, I want to ask you about the Chinese economy, because there are some concerns outside of China about the softness of the Chinese recovery. What's your outlook on the Chinese economy? Do you think the long-term structural drivers of growth, has that changed? Do you see new structural drivers?
First of all, I would say that as all economies of the world, China has problems today. That's absolutely obvious. The Chinese have the problem which was associated with the scars, if I may, of the COVID period, which are there everywhere and are part of our difficulty. This is necessarily transitory. COVID was there. COVID had, again, many, I would say, negative consequences, and there are scars associated with that period, but they will be eliminated progressively. China proved in the past 40 years that it had a capacity which is really hard to believe. And as I said during the Bund Summit, from time to time, I am asking myself when I am in China whether I dream or not, because I knew China, again, 40 years ago in a totally different situation. So it's hard to believe what China has done, what the I would say Chinese citizens, the people of China, the human resource of China succeeded in producing. So that is, problems that are identified and that have to be surmounted, and I don't see any reason why they should not and could not be surmounted. Now, you have also longer term problems at, I would say, 25 years, 30 years, 40 years, and they are more or less the demographic problems. China is not alone. You have all Asia, in a certain fashion, is in a situation which is difficult from that standpoint. Perhaps China more than others because you had a long period of the one-child family. But it is a problem that all advanced economies have, and certainly the European too. And that, of course, calls for much longer-term meditation, solution to trigger a different attitude of the household vis-à-vis babies. And that's not easy. It certainly calls also in Japan, in China, in Europe, for reflecting upon the best way to arrive to what is in any case necessary, a fertility rate which would permit the reproduction of the society, of the population, because you cannot accept a population which is shrinking very rapidly and indefinitely. That is totally out of any common sense. But it's not easy. It is certainly something which is very complex and which is, of course, calls for a decision to be taken by authorities and also cultural changes. And I take it that, again, we are all sharing this major difficulty, but we have to solve also this problem, which is a much longer term problem.
And we also see many developing economies having the demographic challenge as well. But wouldn't you say China's investments in human capital, in productivity, shouldn't that offset maybe some of the demographic headwinds? Because yes, we understand from an economic theory perspective, you need population growth, you need productivity to really boost economic growth. But China is investing heavily in education and human capital. Wouldn't that offset aging challenges?
Investing in human capital is, of course, an absolute necessity. It's a must for all advanced economy, and even more, if I may, for the developing economy. But what I would really say is that you cannot rely only upon extraordinary productivity progress, extraordinary new techniques, technology, robotization, and so forth, to offset a shrinking of your active population. In my opinion, you have to do both. You have, of course, to augment formidably your productivity, your total factor productivity, and your labor productivity in order to preserve your prosperity and to augment the GDP per capita on a permanent basis, which is, of course, what our population, what our fellow citizens are all, I would say, asking for. But you cannot replace humans and fellow citizens by robots. I mean, it's clear you cannot do that. So in any case, stabilization of the population seems to me a reasonable way in the long run. Of course, in the short run, you'll have necessarily, in many countries, and in China in particular, a shrinking of the active population, and the productivity progress that you are mentioning will be there to offset the shrinking of the population. But in the long run, you must stabilize, at least stabilize, even at a very high level, of course, for China, at a very high level, the population. The Europeans have exactly the same problem. They have to also stabilize their population. We will see how we do that. It is a cultural problem. It is a problem of convincing households that to have sufficiently large family is good. I am not an example in this respect. I have only 2 children, but it's better than 1, if I may. And one of the ideas I had in reflecting on what we are observing in many, many countries is that a key element is the possibility of having ladies having, say, for oversimplifying, 3 or 4 children, and that are at the same time role model in their business or in politics or in administration. So if it is visible that a lady can have many children and that at the same time can produce success in any kind of profession, that plays a role. And maybe it might appear that it is one of the dimensions of convincing against our household to make babies, if I may. And of course, the participation of men in the household is very, very important. There's no doubt on that.
Yeah, we certainly need to see more examples of that. Mr. Trichet, I want to ask you about the European economy, because the latest forecasts from the EU, inflation at 6.5% by year end, but growth at maybe just 0.8%. Are you at all worried about perhaps stagflation risks in Europe?
I would be worried that stagflation risk is considerable if the central banks, if the authorities in general, were not fighting to get back to, I would say, price stability. Stagflation was a period, we refer to a period after the first oil shock and second oil shock, where benign neglect was the rule of the game in the advanced economy at the time, and in the emerging economy too. It was really the start of the emerging economy. So the advanced economy, the US, the European, Japan, were not doing what they should have done to, I would say, regain control of inflation. And the idea that inflation was good because with inflation you had growth, which was the previous vision, proved totally wrong. You could have inflation and you could have stagnation at the same time. I trust that we are in a totally different universe. Benign neglect is not at all favored by any, to my knowledge, any economy in the world, and certainly not by the European. And we even all have, as you know, a goal which is to regain price stability on the basis of getting back to 2% over the medium term. It is the definition of price stability which has been given by, I would say, the European, by the ECB, by the UK, by the US in 2012, and by Japan in 2013. So 4 of the 4 currencies that are in the basket of the SDR, the 4 major advanced economies, plus China, the renminbi is in the basket of the SDR, and China clearly demonstrates that they have no intention to have inflation in China. So I would say it's very reassuring to know that the most important currencies of the world, those currencies that are, I would say, the core of the international monetary system, that are in the basket of the SDR, those 5 currencies I mentioned, have more or less the same definition of price stability. And I take it is reassuring because it means that the market participants, the economic agents, the enterprises, and the household can have in mind that it is reasonable to anchor expectations in the medium term, say in 2025, along the line of this around 2% inflation. So I don't see stagflation in the sense that I don't see inflation being sustainable at a high level. And that is fortunate. Now we have, of course, a period of transition, a post-COVID transition, a transition which is very difficult, also because of other factors, including, I would mention perhaps, if you permit, three elements that are important. We have this new look at globalization, which was a key factor to produce growth at a global level until the most recent period. And in the most recent period, because of COVID on the one hand, because of the geostrategic tensions in the world on the other hand, there is a new look in many countries at globalization, with the idea that too comprehensive, too long global value chain could be dangerous in some respect, because you could have interruption of the production because of a particular component in the global value chain. And so there is much more attention given to, I would say, the risk of having too long a global value chain. And these ideas of de-risking, concentrating on hedging, if I may, against the risk associated with a globalization which would be totally dominant, is part of the difficulty we have for growth, it seems to me, in all countries, and particularly in the countries like China or like Europe, that are very internationalized, and countries and economies where trade is so, global trade, international trade is so important. That's for one. Then we have a second point, which is not negligible, which is the green transition. I take it, and I say that with some humility, because we are still working on that and trying to understand exactly what are the consequences. But one possible consequence of the green transition could be that the, I would say, period where we had very low real interest rates, where we had very low inflation also, thanks to the savings glut at a global level, might be over, because new investments are required for coping with the green transition, and therefore it is less likely in the future than in the past that we would have an excess of savings at the global level, and more likely that we would have a much more balanced, I would say, savings and investment collision. And then, of course, with higher real interest rates and higher inflation, it hampers global growth and growth in all nations. And we have perhaps a last point, which I mentioned as a part perhaps of the inflationary pressure that in the future can be higher than in the past, and which is the issue, the very important issue of inequalities. Inequalities, I would say, employees and workers, particularly those low-skilled workers, considering, rightly so obviously, that they are not treated fairly in our economies, true in the advanced economy, and we could see this emergence of the inequality question very dominant in a lot of advanced economy. And I would say it's also something which appears as really an issue which is very discussed also in the emerging economies. And so all these factors are structural, longer-term factors that are, I would say, certainly characterizing a new course for global economy and for each of our economy. And let me conclude in saying, of course, that on top of that you have the absence of sufficient confidence, which is linked to the geostrategic tensions. And war in Europe, in our case, we Europeans have a war in Europe, and we still don't know, of course, where we go in this respect. So it creates an environment which is not favorable, obviously, to growth. But as regards Europe, the question was on Europe. I take it that until now we had an economy which was behaving more properly than what was, I would say, foreseen. And we will see what happens. I remain very prudent, very cautious. But again, I don't trust that we are embarking in this kind of stagflation we observed in the 70s and beginning of the 80s.
Mr. Trichet, you also said you're not pessimistic, you're not optimistic, you're realistic. I'm not sure if that equates with realism. And if it does, what do you think that means for global governance? What does that mean for multilateralism, especially at a time when our international community faced so many challenges that you mentioned?
There are a lot of difficulties, of course. A case in point is these geostrategic tensions I have mentioned. Another case in point is the problem between the US and China, and the way the two countries and the rest of the world are seeing this competition. So that is something which obviously is not pushing in the direction of optimism, if I may, clearly. These are issues that are very serious, have to take very seriously. On the other hand, you have silver lining in the present situation. One silver lining is the climate change. I was extraordinarily happy to see that we could create a new board at a global level with the active participation of all countries in order to take care of our spaceship, which is our planet. And China in particular is an active participant. Beijing is a hub, a very important hub in this overall, I would say, new board, which is concentrating on sustainability and I would say the best way to protect our planet, and the famous ESG concept and indicators. So we will see how it proceeds, but I found extraordinarily rejoicing in a period where you had tensions to see that on that domain it was possible to have a consensus, a global international consensus. Of course, one of the other way I think we have to be realistic and positive is the progress, the incredible progress of science and technology. Science and technology is, fantastic in the present period in terms of discoveries, progress, experiences, and China is a case in point, but it is everywhere in the world. And one of the very important points from my own perspective is that you do not have barriers in this domain. Science, all the science people are communicating with one another, and there is an international system, an international network, which is functioning very, very well. And it is true in all domains of science. So that is, we never had so many progress. During my own life, I could see the changes of science. I had a first education as an engineer myself, and the way we were looking at the universe was totally different. We even, when I was educated, we are not considering that the universe was really starting 30 billion light years ago, and it was not the way we were looking at that. We thought that the steady state universe was a reasonable way of looking at it, and not the Big Bang. So you see, what I had in mind on our own universe when I was educated is now considered totally absurd. And of course, it is an example. It is, I would say, an emblematic example that I gave you, but the same is true in all domains of science, including mathematics, including physics, biology, and so forth. So all this, you know, of course, you can consider it has also liabilities associated with all those progress, but all taken into account, there is much more assets than liabilities in this incredible wave of science and technology that we are experiencing, including, you know, this new experience, ChatGPT and so forth, artificial intelligence. Some of my friends are telling me, you know, it's very dangerous, artificial intelligence. They will overcome the human beings, will be put, you know, in a very difficult situation. The new intelligence will dominate humankind and humanity. And I tell them, look, each time we have invented new ideas to communicate. It started with poetry. Poetry was a new way of communicating, in keeping in good order the sentences in order to memorize the sentences. But you had a lot of philosophers that were saying the poets are very dangerous. There is a lot of liabilities associated with poetry. The same with writings. Plato, the Greek philosopher, was very much against writings, considering that the, I would say, liabilities associated with writing highly superior to the assets. And the same with printing works, which were invented in China and triggered, obviously, a lot of problems also in Europe. But all taken into account, we know today that all this progress in terms of communication between human beings were full of assets, and that concentrating of the liabilities was stupid. And the same, in my opinion, for artificial intelligence.
Final question for you, Mr. Trichet. Actually, based on your example about the universe, I'm not sure if I should ask you this because I want you to predict the future, right? A future very difficult to predict, but how do you see the future of the China-EU relationship evolving, given all the global dynamics that you mentioned? How do the two sides really manage their differences, but also work jointly to make sure there's stability in the global economy?
As I said, I try to be as realistic as possible, of course. Our relationship depends very, very much on the rest of the world, clearly, on all Asia and the problem that one might have in Asia, all Europe and the US, of course, and of course in Africa. So we are in a universe which is changing structurally very rapidly, and uncertainty is really part of what we have humbly to recognize. We cannot predict what is likely to happen in the future. What is sure is that European Union, the Euro area, on the one hand, and China on the other hand, are two of the three major poles in the world, in terms of trade, of course, in terms of GDP, in terms of finance, in terms of openness to the rest of the world. And two of the three major economies have certainly a very important role to play, as I said, as part of the global economy. We have a stake both on a good functioning of global economy and global finance. The stakes are immense, one of the reasons being that we are open economies, and we know what we are gaining in being open and remaining open. So that convinced me that whatever difficulties, and there are difficulties, including between us, clearly, and we already mentioned it, but with all the difficulties, the dialogue, the candid, open, frank dialogue between us will permit to surmount those difficulties and permit for us to continue to contribute to a prosperity, which is the prosperity of China, prosperity of Europe, and prosperity of the rest of the world.
Great. Mr. Trichet, thank you so much for your time.
Thank you. It was a pleasure.